In today's world, characterized by soaring prices and looming financial uncertainty, it's imperative to unravel the mysteries surrounding high inflation and discover strategies that can help you not just survive, but thrive in this challenging economic landscape. From grasping the concept of inflation and its profound impact on the economy, to drawing inspiration from the investment wisdom of the legendary Warren Buffett, we will delve deep into the realm of investing during periods of high inflation. Join us on this enlightening journey as we explore the power of diversification, pricing power, dividend-paying stocks, and bonds as indispensable tools to successfully navigate these turbulent times. This is the path to becoming a business champion. A. Warren Buffett's investment wisdom. Warren Buffett's investment philosophy serves as a guiding light for many investors. His principles are built on a foundation of value investing, and they offer valuable insights. Long-term perspective. Buffett emphasizes the importance of a long-term perspective in investing. He avoids chasing quick profits and instead seeks undervalued assets with the potential for sustained growth. Discipline and passions. Buffett's success is attributed to his discipline and patience. He remains steadfast in his investment approach, even when market fluctuations tempt others to react impulsively. Value over trends. Buffett's strategy prioritizes value over trends or market fads. He focuses on the fundamentals of businesses and their intrinsic worth. By drawing inspiration from Warren Buffett's approach, investors can develop a mindset that is resilient to market volatility and grounded in long-term value. Understanding inflation. Before crafting an investment strategy tailored for high inflation, it's essential to grasp the concept of inflation itself. Here's a deeper understanding. Purchasing power erosion. Inflation reduces the purchasing power of money over time. This means that the same amount of money buys fewer goods and services as prices rise. Causes of inflation. Inflation can be caused by various factors, including an increase in the money supply, rising production costs, increased demand for goods and services, and external events like geopolitical conflicts or supply chain disruptions. Consequences of inflation. High inflation can have far-reaching consequences, such as eroding the value of savings, reducing consumers' purchasing power, and disrupting businesses and investments. It necessitates adjustments in investment strategies. Understanding the dynamics of inflation equips you with the knowledge needed to make informed investment decisions during inflationary periods. Embrace tangible assets. During times of high inflation, it's prudent to consider investments in tangible assets. These are physical assets that hold intrinsic value and tend to maintain or increase their worth as prices soar. Here's a closer look at this strategy. Real estate. Real estate investments, such as residential properties, commercial properties, or land, can act as a hedge against inflation. As the cost of living rises, so do rental incomes and property values, making real estate an attractive option. Commodities. Investing in commodities like gold, silver, oil, or agricultural products can be a way to protect your wealth from inflation. The prices of these commodities often rise as the value of paper currency declines. Precious metals. Precious metals like gold and silver have a long history of serving as stores of value during economic uncertainty. Their scarcity and desirability make them valuable assets in times of inflation. By diversifying your portfolio to include these tangible assets, you can create a buffer against the eroding effects of rising prices. A key factor is pricing. Pricing is a crucial consideration when crafting an investment strategy for high inflation. It refers to the ability of certain industries or companies to increase their prices without losing customers. Here's why it matters. Protecting profit margins. Companies with pricing power can adjust their prices to offset rising production costs. This ability to maintain profit margins is vital when inflation is rampant. Steady earnings. Industries with pricing power, such as utilities, consumer staples, and energy, often offer steady earnings and dividends. These attributes can provide stability in your investment portfolio. Investor confidence. Investors are often drawn to companies with pricing power because they are seen as better equipped to weather economic challenges. This investor confidence can translate into more resilient stock prices. Identifying industries or companies with pricing power can be a valuable strategy for mitigating the effects of inflation on your investments. Investment strategies for high inflation. High inflation demands proactive investment strategies to preserve and grow wealth. Here's an elaboration on these strategies. Diversification. Diversifying your investment portfolio involves spreading your investments across various asset classes, industries, and geographical regions. It's like having multiple lines of defense to protect your wealth from inflation's impact. Diversification helps reduce risk by ensuring that your entire portfolio isn't overly exposed to a single asset or sector. Dividend-paying stocks. Dividend-paying stocks provide investors with not only the potential for capital appreciation, but also a consistent income stream. Companies that pay dividends tend to be more stable and can shield your investments from the eroding effects of inflation. Bonds and inflation. Protected securities. Bonds and inflation. Protected securities can act as a financial fortress during times of high inflation. These investments are designed to adjust their value based on inflation rates, helping to preserve the real value of your money. Embrace tangible assets. Tangible assets like real estate, commodities, and precious metals tend to hold their value during inflationary periods. They can serve as a reliable store of wealth when paper currency's value is diminishing. By employing these strategies in combination or as part of a diversified approach, investors can navigate the challenges posed by high inflation more effectively. Identifying industries or companies with pricing power can be a valuable strategy for mitigating the effects of inflation on your investments. Crafting an investment strategy for high inflation involves a combination of understanding the economic forces at play, drawing inspiration from successful investors like Warren Buffett, and adopting specific investment tactics such as diversification, focusing on pricing power, and considering tangible assets. These strategies collectively provide a comprehensive approach to protecting and growing your wealth in inflationary environments. If you found this video helpful, please follow for more insights about becoming a business champion.